You can clearly see here, of course, starting with the valid pullback identification. We all know that in a candlestick based uptrend, price breaks past the highs. Like we expect price to break past the high, but the low should be protected. So that's what we expect in a counter trend, like in a bullish candlestick pattern. So you can clearly see here, price broke past the high, while this low here was protected. Coming here now, the reverse, the opposite became, you can clearly see here, price took the low first before taking the high. So in this case, in such a scenario, this is what we call a valid pullback, where price, in a bullish scenario that is, where price takes out the low before taking the high. So this is what we call a valid pullback, and this one here is what we call the low of that valid pullback. That's a bullish scenario. Of course, there is many scenarios. You can check the video on valid pullback identification, but I'm expecting each and every one of you knows how to identify a valid pullback. And also this here is a simplest, but actually very important thing to know. All right, so now the opposite will be on the bearish valid pullback. You can clearly see that price made a break past the low while protecting the high. Then this next candle, I was expecting a break past the low while this high being protected, but you can clearly see that price broke past the high. You can clearly see that right here, price broke past the high and then later made that break past the low. So in this case, I have said this now is what we call the pullback. So this one here will be the high of the pullback, and in this case, this one here is a bearish valid pullback. This one here is a bullish valid pullback. You can clearly see here, this here was a break by a wick, and this one here was a break by a body. So it doesn't matter. This means that it doesn't matter. The break can be either by a wick, and it can either be by a body closure, and also it doesn't matter the color of the candle that sips or breaks past the previous candle low in a bullish scenario or in a bearish scenario. It doesn't matter of that candle. It can be bullish or bearish. It actually doesn't matter. All right, so that's about valid pullback, and yeah. So now let's get into the bullish break of structure. Now, how do we identify a valid break of structure? All right, we all know that. All right, let me not use the terms inducement and all of that. So we'll get there. Of course, I'm heading there. All right, so assume when you see something like this on the diagram, assume that this one here is a bullish break of, a bullish valid pullback, whatever I'm showcasing here, this one here. And if you see something like this, or yeah, something like that, assume that this one here is a bearish valid pullback. So when you see such a drawing, know that I'm actually meaning that. All right, so in this case now, let me explain how we confirm a valid pullback in a bullish, a valid bullish break of structure. So you can clearly see right here, price created a valid pullback exactly right there, and then price, you can clearly see it broke past this low. So this low. So price reversed back and broke past this low. We usually use the term taken out, like it took out this low then. All right, let me not use the terms first, but actually you can clearly see I've said this one is a valid pullback, and then price reverses back. Don't worry, I'll be showcasing this with the charts. So yeah, so you can clearly see here price came, broke past this low before breaking past this high. It's actually the same thing, just that now we are actually broadening into the pullbacks. So right here, the pullback, price took the low, made that, then after that it extended all the way, breaking past this high. So when you see such a pattern, just know that that's a valid break of structure. That is in a bullish scenario. And now in a bearish scenario, it will actually be the inverted form of this one. You can clearly see this one is a valid pullback. So this one here will be the high of the valid pullback. You can clearly see that this one here is what I'm talking about. So this high, and you can clearly see in this case price came. And by the way, I said that this break or this to take like this sweep or this let me just use the word break. This break can either be by a week or by a candle close. Like here, you can see this here was a break by a week, and I confirmed this here to be a valid pullback low. And here it was a break by a body, and I confirmed this one to be a valid pullback high. So right here, you can clearly see price extended deeper. So this means this one here is a break by a body, and this one here is a confirmed valid break of structure. So this one here is a valid pullback, and you can clearly see this was kind of a sweep. So this means this here is a break by a week. So a break by a week in that case also will be considered, this one here will be considered to be a valid break of structure. Alright, so guys, let me do this. Alright, however, sometimes price may create such a pattern, these patterns. This here in a bullish scenario, price can create such a pattern or this kind of pattern and still not be a valid break of structure, and still this one here not be a valid break of structure. This one, even after price has created such a pattern. But this is very rarely, because most of the times if price creates such a pattern, that's a valid break of structure. But sometimes price can create such a pattern and we can still ignore, or we can still doubt this one here is a valid break of structure. But that is very rarely. So in scenarios where the retracement is not deep enough past the 38.2 of the Fibonacci, that is, we use the higher time frame to confirm. A higher time frame valid pullback is a lower time frame complete structure. What I mean is this one here. I said when you see such a pattern, I mean a valid pullback. So right here, this is the higher time frame. So when you see this one here, just know that this is a valid pullback on a higher time frame. When you see a valid pullback on a higher time frame, on a lower time frame, it should be the pattern that we talked about. A valid pullback, and price reverses back, breaks past this low, and then you can clearly see making a valid break of structure. So now if this is true, that a higher time frame valid pullback is a lower time frame complete structure, when can we say that when such a pattern is formed, when can we invalidate that this one here is a valid break of structure? If this pattern on the lower time frame is not a valid pullback on the higher time frame. That's what I'm actually meaning. And that's the reason as to why I'm saying it happens very rarely, because most of the times when this valid pullback is created on a lower time frame is a complete structure like this one here. And this is the time frame that I'm actually talking about. So that these are the time frames that I'm talking about. The daily time frame right here, daily time frame, the 4 hour or the 1 hour, that is the lower time frame. So pick this as the higher and this is the lower. The 4 hour time frame, 15 minutes will be the lower time frame. So if this here is a valid pullback on the 4 hour, just note that on the 15 minute is an complete structure like this one. Price takes this low before breaking past this one. So this means if price now reverses and breaks past that, that will be a valid bull break of structure. Alright, so the 1 hour, of course, the 5 minutes, the 15 minutes, the 3 minutes, and finally the 5 minutes will be using the 1 minute. Right, so those are the time frames. I believe we all know this this move of if this is the external structure, this is the internal structure and all of that. And this is also the same, like this one here. If the how we will be confirming the internal structure and the external structure, we'll also be using this one here. Like this is the higher time frame, this is the lower time frame. So if you want the internal structure to see more data of the internal structure on the daily time frame, you will use the 4 hour or the 1 hour. If you want the internal structure, if you are in the 4 hour and you want to navigate the more data, you will use the 15 minutes, and so is the same with this one here. Alright, so now let's get here where price has retraced deep past the 38.2 fib and reverses, breaking the structure without taking the inducement. Alright, so like I said, we say that this here is the pattern where price takes a pullback and then breaks the structure. So now if this is the pattern that we usually confirm a valid break of structure. Now what about price has retraced deep past the 38.2 fib and reverses, retraced dip and reverses breaking the structure without taking the inducement. The inducement, the recently formed valid pullback, which is this one here. So you can clearly see here, price reversed back. You can clearly see that price reversed back, but it didn't take any pullback. So in this case, it can only be considered to be a valid BOS or break of structure if it is a valid pullback on the higher time frame. So that's actually how we use this. So if, let's say in this case, you can clearly see that this retracement was very deep inside our trading range. You can clearly see that's the trading range, and this retracement is very deep, and price reversed back, breaking the structure, but you can clearly see that this one here was not taken out. So this means that our pattern is yet met. This pattern in a bullish scenario is not yet met. So this means now, how can we confirm that if this one here is a valid break of structure or if it's just an invalid break of structure? And that's why now we will be using the higher time frame. I say that higher time frame valid pullback is a lower time frame complete structure. So this means that if this one here, this move is a valid break of structure on, is a valid pullback on a higher time frame, then this one here will be confirmed to be a valid break of structure. Right, so that's very important, especially in doing market structure. Right, and the same here. Let me solidify here. I know in scenarios where the retracement is not deep enough past the 38.2, so you can see like this retracement here. This. Let me explain what I mean by this one here. You can see this retracement. Let's say this retracement was not deep past the 38.2. The 38.2% of the Fibonacci. Let's say it was somewhere like this pattern was created somewhere like here. So let's say there was, alright, let me delete this and use this brush. Alright, so let's say the pattern was created somewhere there and price took out the low and then reversed back. So let's say it was something like that. And this retracement, it was not deep enough past the 38.2. You can clearly see that the 38.2 is exactly right here. So this means that if this is the case, is this now a valid break of structure? In this case now, we will not be using this one here as a valid break of structure if this here is not a valid pullback on the higher time frame. So the reason is why I'm actually showcasing, I may doubt this one is because the retracement is not deep. Because we know like if the retracement is deep somewhere like past the 50% or even past the 78, in this case then I'll be more convinced that this one here is a break of structure than when the retracement it was just like here, even it has not yet like retraced deep past the 38.2. So in that case I'll be doubting if this is a valid break of structure, even though our pattern has created. We know that the market is an uncertain environment. So the pattern has created, but I'm still doubting if this one here is a valid break of structure. So now, how can I validate that? I will need to use the higher time frame. Of course, with this phrase, which is very, very important. This phrase exactly here, this phrase is very, very important. A higher time frame valid pullback is a lower time frame complete structure. All right. So now, let's get into the inducement part. Don't worry, guys. I'll be explaining all that on the chart. I've said that we first dive into the theory part and then validate that using the charts so that we can reinforce or solidify what I have showcased with the theory part. So in identification of inducement, we only focused on the recently formed valid pullback. Recently formed. This is the keyword recent. Recently. This recently formed valid pullback, high or low, depending if we are bearish or bullish. Yeah, of course, high or low, depending if you are bearish or bullish. Meaning, if you are bullish, we'll be focused with the low, and if you are bearish, we'll be focused with the high. So that's the reason as to why I'm saying depending if we are bearish or bullish. Meaning, if price creates another valid pullback before taking out the previous one, we shift to the next. So the reason is why I use the word recently, and I said that the keyword here is recently, is because if price now creates another valid pullback, right here, creates another valid pullback without taking the previous one, then we'll be shifting the inducement to the recent, because now this one here becomes the recent valid valid pullback low, and that now will be the inducement. So all right, so now in this case you can clearly see this is the recent valid pullback, and I said we'll be focusing on the low, and that will be the inducement. The sell side liquidity resting below this low is what we call the inducement. We know that when you see a pullback high, there is some buy side liquidity that is resting above here, and when you see like a valid pullback low, there is some sell side liquidity that is resting below here. So exactly right here, on this recently formed valid pullback, on this sell side liquidity is what we call now the inducement. So that's the reason as to why we cannot buy before the inducement, because there is some liquidity here, and this is a core liquidity that price is targeting before pushing higher. All right, anyway, we'll be diving deep on that. So first, all right, so again here you can clearly see this is a bearish scenario. So we say that when you see such a pattern where price has taken the recently formed valid pullback and made that break of structure, it doesn't matter if price goes forward to take another one. We are only focused with this one here. If price takes this one, then this one here is a swing point, and if price reverses, that will be a valid break of structure. And to identify the inducement, we are only interested with the recently formed valid pullback. It doesn't matter if this recently formed valid pullback gets created before the break of structure or after the break of structure. It doesn't matter. In this case, it was created after the break of structure, and in this case is what we call the major inducement, because it was created after the break of structure, this recently formed valid pullback. In this case here, it was created before the break of structure, but that doesn't mean that price will not create another one here. Price can create another one there, but if price has yet created that, and exactly right here price creates that, then this means that this one here will be the inducement, even if it was created before the break of structure. And this is what we call the minor inducement. This one here created after the break of structure, we call this major inducement. If it was created before the break of structure, we call this minor inducement. And in this scenario where price creates this minor inducement, the external liquidity is what will be called the major inducement. So this means that price can decide to actually fail this. When we get into the entry modules, we know that the minor inducement sweep is a low probability setup. So price can fail this and decide to go after this. So in that case, don't think of this one here being a change of character, because you'll be wrong, and price will be going forward to take this major inducement before making the ultimate move towards the break of structure. Right, so I want to believe that we are done with the theory part, and now let's get into the practical part. I'll be using this one here, and yeah, let me go back in time, so somewhere like, all right, so all right, let me start here. All right, so exactly right here you can clearly see that price was creating these valid pullback highs. You can see that's a valid pullback. All right, this one here is not a valid pullback. This one here is a valid pullback. Again, another valid pullback. And now here, before price breaking past this one while protecting this low, you can clearly see that the opposite happened here. Price came for this low before now breaking past this one here. You can clearly see right there. So price came for the low before the break past the high. In this case, this one here is what we call now the valid break of structure. So the pattern, as you can clearly see, the low and then that one. So that's a valid break of structure. So I'll be using this. All right, let me just, so that we can be together here. So that, and I'll be using this one here. Since we are on the 4 hour, so let me just use the 4 hour bullish. So that's a valid break of structure. And I said that if, all right, in this case there is no any valid pullback here, so this means that this low or our external liquidity is what we'll be calling the inducement. We know after identifying the breakout structure, the next step is actually the inducement. All right, so let me just mark so that we can have a network. So this one here is our low, so I'll be using this one here to represent the inducement. So this one is our inducement, and you can clearly see that price has mitigated this this one here, of which we know that that's a smart money trap, because we said we cannot participate into a trade before price has taken out the inducement. So this one is a smart money trap, and price will take this out before this one. So but we are focused with the inducement and the market structure. So let's just, all right, so let me make this not that speed. All right, and you can clearly see right here, price showcased this. This reaction was here mainly to lure the early buyers, but then later price came for the inducement, and probably price will be looking forward to break past this high, exactly right there. So I'll be using this this one. And by the way, if your mic is on, I would recommend you switch off your mic, so that we may not have some overlapping sounds on the recording, kindly. All right, so exactly right here, you can clearly see now. I will not be showcasing more like the POIs and all of that. I'll just be showcasing the market structure and the inducement, because that's what we have been covering. All right, you can clearly see right here, after price has taken out this low, exactly right here, price came and broke past that high. So in this case, this one here is our low. I mean, this here is our low, and of course our high will be this one here. Now after that breakout structure, we know the next step is actually identifying the inducement, and we know that this here is the recently formed valid pullback. I know someone will say that this one is the recently formed, but this one is not the valid one. The valid one is this one here. This one here will be the valid one. I mean, let me just leave it there for the explanation. Alright, so this one here will be the valid one. The reason is why I'm saying that is because you can clearly see price did that and price did that. So this means if you pick something like this inside here, you will be picking something that was engulfed by this order flow. You can clearly see. So you'll be picking something that is invalid, and the one that will be valid is this one here. So that will be the valid, I mean the valid inducement is this one. And that the one that you are marking, I mean this one here, will now be an invalid one. So this is the case, and in this case, since this one is the minor and we can't see any break past this one, so let me get rid of that and get rid of this. So I cannot see any valid pullback after the breakout structure. So this means this is our minor, I mean our minor pullback, and this one here will be our major. So I'll be using this one here as our not that I will be using it, but that's our major inducement. All right, so let me continue running price. All right, now price creates a valid pullback after the breakout structure. So in this case, this one here becomes now just an external liquidity and not this, I mean not the inducement anymore, because price has created another valid pullback, because we said if price creates a valid pullback after the previous one, we'll be shifting. So this one here will be now our inducement. This one here is no longer the inducement. I see people marking this one here as the minor. Since this here was our minor, they leave this one here. I mean, they leave this part here, and they say that this here is a minor inducement and this one is a major inducement. No, after price has created another a valid pullback, this here is no longer the inducement, and this cannot be called even the minor inducement. You cannot call that the minor inducement, because the inducement is the recently formed valid pullback, and this one is the recent. And let's say now price decides to create another valid pullback right here, I will be shifting this one, and this one will no longer be called the inducement, and this one here will now be the inducement. That is if price creates another valid pullback. All right, so now let me continue running price and see what price. All right, as you can see right there. All right, I said that I will not be marking the POIs. I'm only interested with the taking out of this inducement and then price making a breakout structure. So If price now breaks past that, that will be a break of structure. The reason as to why I'm not using the fib right here is because these retracements are very, you can clearly see this retracement was even past the 100, and you can clearly see the retracement that I'm in, it's actually past the 38.2. So this is convincing enough that this one is a valid, and probably maybe price will retrace even deeper. Alright, you can see price retraced even deeper, mitigated the decisional, and you can clearly see prices. You can clearly see there price has made that break of structure. So exactly right there, this one here will be our bullish break of structure. And of course, our trading range low is no longer here, will be this one here. So that's now our new trading range low, and we are now in a new trading range. Alright, so let me continue running price. Of course, where is the inducement? This is not a valid pullback, so the inducement in this case will be this one, and this is a minor inducement. So yeah, take note of that. This is a minor inducement, and the major inducement, of course, it will be the external liquidity, because there is no any valid pullback after this break of structure. Anyway, let me continue running price. Price may decide to create a valid pullback here, and as you can see, price created a valid pullback here. So this means that this one here is our inducement, and this one here is no longer an inducement but just an external liquidity. So right now price is looking forward to mitigate a POI before deciding to break past this one here. Alright, so let's see. Alright, as you can clearly see, let me make this fast so that alright, so price mitigated that, gave that reaction, but as you can clearly see, price made a break of structure to the downside. So this is an early sign that price is bearish. Why am I considering this one here as a valid break of structure, even though this one here is a break by a week, is because of this major inducement here. Because of the major inducement, like we said that after price creates a major inducement, this here is no longer an inducement but just an external liquidity. So if we see a break by a week or a body closure, like I said on identification of valid pullbacks, then we consider that as a valid break. Alright, so right here, this is a change of character or a bearish break of structure, whatever name you call it. Alright, so now let me continue running price. So now we are bearish, not that. Alright, so anyway, we haven't marked our inducement. Right, I can clearly see that. So this means that I cannot say that this one is our inducement, but rather I will be using this one here as the inducement. Why am I using that? Because you can clearly see that this one here is engulfed. So you can clearly see you'll be picking something that is not valid. So this one here will be now the minor inducement. So I'll be using this one here as the minor inducement, and that one will be our major inducement. And this one here is just a random buy sell liquidity, so let me get rid of it. So right now, if price breaks past this low, after taking out the inducement, then I will be confirming that this one here is a valid break of structure to the downside. Right, so let's see. And as you can see, price made a break of structure to the downside, and you can clearly see our inducement is yet taken out. And this is the scenario that I was talking about. In this case, I know most of you guys will do this. We'll pick this one here as not a valid break of structure and take this inducement right there, so that we say that this one now is our major inducement, and you will be marking your POIs starting from this high all the way to this low, or you will be using this trading range starting from this high all the way to this low, so that now you'll be saying that this one here is the trading range. But in this case, you can clearly see that this retracement is very, very deep. So in that case, I'll be doubting it. I'll be doubting if that is not a valid break of structure. Why am I saying it deep? I said if the retracement is past the 38.2, and you can clearly see that this retracement is past the 38.2 of the fib, exactly right here. So in this case, I'll be doubting if this one here is not a valid break of structure. And I said, how do we confirm if this one here is a valid break of structure or not in a scenario where price has not taken out the inducement before making the valid break of structure? So in this case, that's when now I came up that now the phrase higher time frame valid pullback is a complete lower time frame valid structure, I mean a complete lower time frame structure. What I mean is that if in a higher time frame it's something like that, in a lower time frame, I mean this part in a lower time frame, it will be something like that. It will be something like this, where price has taken out that and price has done that. But alright, so now in this case, price has not taken out the inducement, but I'll be using this one here. I will be confirming this one here to be a valid break of structure if I see this one here on the higher time frame. Alright, so let me use let me showcase it like in a way that you all can understand. So let me get rid of this. So like alright. Alright, so let me get rid of that and that and that and that. Alright, let me just leave like that. And alright, so this one here is the high. So now is this here a new trading range high, and is this one here a valid break of structure? That's what I'm actually wanting to confirm. And if you remember on the theory part, I think the theory part is on this another tab here. So if you remember on this theory part, exactly right here, I said, yeah, this is the scenario that I was talking about, where price has retraced deep past the 38.2 and reverses, breaking the structure without taking the inducement. You can clearly see that price here, I mean it was, yeah, this part, price didn't take the inducement, which was this one here, and price broke the structure to the downside. So in that case, it can only be considered to be a valid break of structure if it is a valid pullback on the higher time frame. And here is the time frame that I was showcasing. Like this one is the external structure and this one is the internal structure, or this is the higher time frame and this one here is the lower time frame. The daily will be using the 4 hour or the 1 hour as the lower time frame. The 4 hour will be using the 15 minutes. The 5 minutes will be using the 1, the 15, the 3, the 1. Alright, we are on the 4 hour. So this means our higher time frame will be the daily. Right, so now let's get back to alright, let me just alright, on this new tab, exactly right here, I want to confirm if this one here is a valid pullback on the daily time frame. So now I'll be shifting to the daily time frame because that was the 4 hour, and we can clearly see right here that this one here is a valid pullback. You can clearly see that price broke past the previous candle high and then later can clearly see that. So this means this is a valid pullback, and in this case this one here is a valid pullback. I mean that's a valid bearish break of structure on the 4 hour or the 1 hour. Alright, so let me now reverse back to the 4 hour. This is what I wanted to confirm. So if let's say price has not taken out the inducement, but on the lower time frame, I mean on the lower time frame price has not taken out the inducement, then you can confirm it to be a valid break of structure if on the higher time frame is a valid pullback. So in this case, this one here is our valid pullback. And so this means that this one here is now our trading range high and it's not this one. So this means that if you are to use the fib, you will be using it starting from this area right here all the way to whatever we are right now. So that's our trading range. Alright, so right now you can clearly see that this here is our inducement. Yeah, you can clearly see that's the recently formed valid pullback, and so that's the inducement. And yeah, since we are not marking the POIs today, yeah, we'll be focusing on the POIs tomorrow. So let me just run price and see where price will be reversing from. Exactly right there now, price took the inducement right here, but I am doubting this retracement. You can clearly see right here. Let me do this. You can clearly see that price has taken out this inducement, but in this case, I am doubting this retracement. This retracement is very, very small. It's not even past the 38.2. So in this case, is this now a valid break of structure? All right. So you can clearly see if I do this, this retracement is barely here. You can clearly see our 38.2 where it is. All of this space. This retracement is not deep enough, but our pattern is there. You can clearly see that our pattern is created. So in this case, is this one here, I mean this one here, is this one here a valid break of structure? In this case, that's not a valid break of structure. Why is not a valid break of structure? Because if we shift into the lower time frame, this one here is not a valid pullback. So now this brings me to, all right, let me just leave this line here. So exactly right there. So can we confirm, how can we confirm if this is a valid break of structure? All right, coming again into the theory part, I said here, in scenarios where the retracement is not deep enough past the 38.2, you can clearly see here, this retracement is not deep enough. I can use the fib right here, dragging from our trading range high all the way to that low. And you can clearly see that this retracement is very small. The 38.2, you can clearly see the 38.2 mark where it is. So in this case, in scenarios where the retracement is not deep enough past the 38.2, we use the higher time frame to confirm. Higher time frame valid pullback is a lower time frame complete structure. Like I said, that this one here is a very important, should I say phrase or whatever, that one. So in this case now, to confirm this one here, if it's a valid break of structure, I will need to shift back to our higher time frame. And since this one here is the 4 hour, so then this means that I'll be shifting to the daily, because the daily is a higher time frame. All right, so now we can clearly see that, and I will need to confirm if that's a valid pullback. I mean, that's a valid break of structure or a valid pullback on the daily. If I get into the daily and I see this place, you can clearly see a candle. So you can clearly see that price has been breaking the structure. You can see while protecting the highs. You can see the highs are untouched. You can see the highs are protected. You can clearly see that this one here is just a bearish, what we call a bearish candlestick part. I mean, a bearish candlestick downtrend. Yeah, that is what I'm saying. So this means that that's not a valid pullback, and if it's not a valid pullback on the higher time frame, then this means that even on the lower time frame, that's not a valid break of structure. So this one here, I am now convinced that this one is not a valid break of structure. So that's how you confirm the scenarios. All right, so now we have confirmed that, and now this means then this one here becomes our high. I mean our recently formed valid pullback high, and that's now our new inducement or our inducement. So now where is our trading range? Our trading range starts there all the way to this low. Why? Because this one is not a valid pullback. I mean a valid break of structure. All right, so let me continue running price. All right, so you can clearly see that. All right, price has taken out the inducement, as you can see. So all right, this low has yet broke this low, so this means that this here is our trading range low yet still, and price is now looking forward to mitigate something here before it can now reverse back to our this one here. So I'm not interested with all that, because we said we are not marking the POIs today. We are only focused with the inducement, market structure, and identification of valid break of structures. All right, so now if price breaks past this one here while protecting this high, then this one here will be a valid break of structure. And as you can see, price is doing that. All right, so price is very consolidating here, but then eventually, as you can clearly see, price made that break. So this means that this one here is our valid break of structure. Why is it a valid break of structure? And in this case, a bearish. Why? Because our trading range high is protected and price has taken out the inducement. And in this case, I cannot even, it's like this one here is already a break of structure. Like, I'm even convinced there's no need for me to use these validations that we usually use, like placing the fib. You can clearly see this retracement went deeper to 78% of the trading range. You can also see that price has taken out the inducement. So in this case, I'm fully convinced that this one is a valid break of structure. All right, so you can clearly see our trading range high is this one here. So our trading range high is that one. And where is our inducement? I can clearly see that this one is the recently formed valid pullback. And if price creates another one, then we'll be shifting to the next one, because we said it needs to be the recent. Very important. All right, so exactly right there, you can clearly see price shifted to this one here. I can zoom if you can see that price, that one there. So that's our inducement, and price has taken out that, and this one here is now the low that I'm looking forward for price to reverse, or for price to reverse, taking that. So right now price is looking forward to mitigate something here before now it can break past this low. All right, so as you can see, and by the way, this retracement is already deeper. So now, even if now price reverses from where it is, you can clearly see the 38.2 it was here, and price retraced even deeper to 50%. So if now price reverses back and break past this one here will be a valid break of structure. All right, so exactly right there, you can clearly see price is even retracing inside deeper into our, and of course, all right, so we know that right now price has yet broke past this one on the 4-hour. So yeah, but eventually this is the low that we are looking forward for price to reverse, not unless price has mitigated a higher time frame POI. So this means that there's a possibility that price maybe can go all the way breaking past this, or maybe price can decide to come to this POI before it can actually make that move. So price can decide to fail this POI, which was somewhere here. So price can decide to fail this POI, which it was the extreme, because you can clearly see that this one is the extreme order flow. Anyway, guys, don't worry about what I'm marking, because I said we are not diving into the order flows. I mean into the POIs today. So this one is the extreme. So why am I saying that's the extreme? You can clearly see that this is now the invalid one, because it was mitigated here, and this one is the extreme, and it is also the decisional, and it is not mitigated. So this means that our extreme order block will be somewhere here. So this means that this one here is our extreme order block, and price is reversing from our extreme order block. The reason is why I'm using this one, you can clearly see it's not been seen using this time frame, so you'll need to shift into the lower time frame to see the valid BOB right there. So price mitigated that, and you can clearly see it's reversing. But after price has mitigated this something here, price is showcasing some bullish signs that it's heading towards this one. So this means that there's a possibility that price has failed this, and it's looking forward to either mitigate this origin order block before now it can reverse back. So there's a possibility of things like this. So price can do this and continue below, or price can do this and then make a break of structure. That is if price has mitigated a higher time frame something here, or if price has, that's the only way that price can make that, if price has mitigated that higher time frame POI. But actually I'm looking forward for some pattern like this here. I'm looking forward for such kind of pattern, price to mitigate that and probably do that. But I cannot predict that. I'm not predicting, I'm actually reacting on what price is doing. I'm actually just taking the bias and all of that. Anyway, like I said, the current price where we are currently, price has yet broke the structure, and you can clearly see that is heading towards this POI. So that's where I'm actually looking forward for. If price mitigates this POI, then I'll be looking forward for sell. I'll be looking forward for sell, because this one is a valid POI. It's the origin order block. It's the one that can clearly see the origin. So if price now comes and mitigates that, there's a possibility that price may reverse all the way breaking the structure, or if on the higher time frame there's a mitigation here, then this one here will be something else. Price may now use this origin order block as a reaction zone. So it can be something like that, give a reaction and then finally make that break of structure and shift bias to bullish. Right, anyways guys, so I'll be stopping the practical part here, because that's where we are currently, and you can clearly see price is counting, so meaning we are currently there. So I believe you have gained what I was showcasing. And by the way, if you have noticed, I have not showcased what I have showcased for the retracement and for the valid pullback, like the higher time frame valid pullback, lower time frame complete structure. And these are the kind of things that made me to redo the pro trend first before we get into into the counter trend, because they are very, very important when you get into the counter trend. Yeah, they'll make the counter trend playbook softly if you get to know such things. So guys, practice and practice and practice the market structure, the identification of inducement, and all of these, like the retracement when they're deeper enough, not deeper enough. Yeah, practice and practice. And so right now I'll be ending today's session here, and that's what I wanted to cover for today. Yeah, tomorrow we will now be diving into the POIs. We know that's a very important part. Yeah, the POI is very important part. So yeah, I'll be leaving it here, and right now I am ready for the questions and yeah, all of that.